Hey everyone, welcome back. Today I'm diving into a hot topic for 2025. Is Airbnb stock actually a good investment right now, and does it have what it takes to hit $1,000 a share? Let's break down Airbnb's financials, the pros and cons, how it stacks up against competitors, and what the future might hold. If you're into smart investing, you're in the right place. Let's jump in. First up, the numbers. Airbnb's financials are looking pretty strong overall. In 2024, they pulled in $11.1 billion in revenue, which is up 12% from last year. Net income was $2.6 billion, giving them a net profit margin of 23.4%. That's solid. Their adjusted EBITDA margin was 36%, and they generated $4.5 billion in free cash flow. All this points to a business that's not just growing but also throwing off serious cash. But it's not all sunshine. Q1 2025 saw net income dip to $154 million, mostly because of higher stock-based compensation and some investment write-downs. Still, with $11.3 billion in cash and only $2 billion in debt, their balance sheet is rock solid. They've got the financial firepower to handle pretty much any curveball. Alright, let's talk pros and cons. On the plus side, Airbnb has a killer global brand, over 8.1 million active listings, and they're always improving. Over 430 platform upgrades in the last year. They're expanding fast in places like Brazil and Japan. And get this, their app now drives 55% of bookings, up from 50% just a year ago. But there are real risks. Regulations are a big one. New York's 2023 law wiped out 80% of local listings almost overnight, and more cities could follow. Then you've got tough competition from Booking.com and Expedia. Economic slowdowns could hit bookings, and high stock-based compensation keeps pressure on profit margins. Now, how's Airbnb doing against the competition? Unlike Booking and Expedia, which offer everything from hotels to flights, Airbnb really nails the homestay experience. In Q2 2024, Airbnb's revenue grew 11%, outpacing Expedia's 6% and Booking's 7.3%. That's impressive. But keep in mind, Booking trades at a lower valuation, and traditional hotel giants like Marriott are clawing back business, especially from business travelers. Still, Airbnb's unique experiences and strong brand give it a real edge. Looking forward, what's next? Airbnb is betting big on new markets, AI-powered guest experiences and services like icons and long-term stays, which already make up 17% of bookings. If these bets pay off, growth could really accelerate. But there's no denying the risks. Tighter regulations, economic downturns, and fierce competition could all slow momentum. So, could Airbnb actually reach $1,000 per share? Honestly, it's a stretch in the near term. But if revenue growth holds up and they navigate the risks, it's in play long-term. Since the 2020 IPO, Airbnb has returned 113%, trouncing the S&P 500 60 to 70%. But it's been a wild ride. Bottom line, Airbnb is a growth stock with strong fundamentals, but it's not for everyone. They don't pay dividends, so if you're after steady income, it's probably not your pick. Weigh the pros, cons, and market trends carefully. What's your take on Airbnb stock? Drop a comment below, and if you found this breakdown helpful, hit that subscribe button for more deep dives. Thanks for watching, and happy investing.